Welcome back to another video by Real FX, and if you are new to the channel, you just joined us, don't forget to subscribe, hit the notification bell icon so that YouTube can notify you when we post another video. Now, this is a video that many people have been waiting for. They kept on asking for us to make this video. So this video is all about points of interest. So this video is going to be talking about points of interest. We're going to have line drawings of points of interest, like textbook examples. And then after that, we're going to dive into the real chat. So if you want to know more about points of interest, do watch this video till the end and you will not regret it. And if you enjoy the video, please give us a thumbs up. That motivates us to keep making more videos like this. Okay, now let's talk about a point of interest. Now I'm gonna go ahead and draw a simple illustration, and then I'm gonna show you where I look for my points of interest. These are very significant points where the market can turn. Now let's say we are in a downward trend like this. Actually, let's say we're in a downward trend like this. In a downward trend like this. This is a downward trend. Now, in this downward trend, we tend to have a small structure going up and down like that. We tend to have this kind of structures going up and down like this. Now I'm gonna show you something very interesting. And then if you don't know anything about points of interest, watch till the end and you will see how we apply this on real charts. I'm gonna go ahead. Now this is how the market tends to look like. Now let's focus on how we could have caught this leg. Let's say this point is here and this one is also here. Let's focus on how we could have caught this movement here. This movement here. This movement here. Let's focus on how we could have caught that movement. Now, what people would tend to do is to look for an order block. You know, that's like the traditional way of trading SMC. You look for an order block. When the market taps into the order block, you start selling from it. You start selling from it. That is what people would do. But at Real FX, we tend to look for an order block that is associated with a QML. If you don't know what a QML is, we just made a video explaining what a QML is. It's a Quasimodo level, and then this here is our Quasimodo level. This here is our Quasimodo level. So any order block that is near this area or associated with this level over here is going to be taken as a significant order block. It's going to be taken as a significant order block, and we start looking for trading opportunities from that order block. Now, as you can see, if we have this level here as the QML, we expect the order block to be this last order block here, or it can be any order block just around here. It can be any order block just around here, as long as this order block is a significant order block. So how do we check if it's a significant order block? The first part is mitigation. It must not be a mitigated order block. The order block must not be a mitigated order block. Now, how do you mean? What do you mean when you say an order block is mitigated? So if an order block is mitigated, it simply means price created the order block. Price created the order block like this. Price created the order block, and then price moved away from the order block without reacting on it, and then came back to mitigate it and pushed away from it. Now that order block is mitigated. But if the order block is left like this and then price moves away from it, Now that order block is not mitigated. Now that's the kind of order block that we are looking for. So we expect to see an unmitigated order block, and then we expect to see liquidity. We expect to see liquidity, guys. Liquidity is very important. If we don't see liquidity, we don't trade. No liquidity, no trade. This is how we do it at Real FX. No liquidity, no trade. So in terms of confirmation, sometimes you do wait for a confirmation, sometimes you don't wait for a confirmation. Now, most of the time we don't wait for a confirmation if it's an extreme order block. But if it's an order block, let's say we have an order block here. Let's say we have an order block here. Let's say we have an order block here. The order block is unmitigated. And then here we also have, let's say from this point here, we have some sort of imbalance. So if you don't know anything about imbalance, leave a comment in the comment section, and I will gladly make a video about imbalance. So let's say we have an imbalance, and then since we have this imbalance, and then we have liquidity forming before this order block, has a higher chance of holding. But when the market reaches this order block, we don't take a trade immediately. We wait for the order block, we wait for the market to do what we call a mini change of character, a minor change of character. So we should see the market, let's say this part over here, let's say the market just tapped into this order block, and this is the order block. Let's say this is the order block. The market just tapped into it. This is the order block. Let's say the market tapped into the order block like that, like this. Let's say the market was going up and down, and then the market tapped into the order block. We expect to see this minor change of character here. This is very important, guys. You should always use confirmed entries, especially if it's not an extreme order block. If it's not an extreme order block, it's advisable to use a confirmed entry. So we react on it, and then the market pushes to the upside, and when it gets to the upside, it will react on an order block. The market will react on an order block probably somewhere here. So the order block can also be at the extreme, or the order block can be associated with this QML here that we're going to be having here. So the order block can be associated with this QML here, and the order block will tend to be here, and then this here would reverse there and then start pushing to the downside. Now those are the kind of the 2 points of interest. So we can have the primary point of interest is the extreme point of interest, and this extreme point of interest tends to be at what? At near the QML level. So don't be confused. Mainly we have 2 points of interest. It's gonna be this one here at the extreme level, which tends to be near the QML, or it's gonna be this point of interest here, which tends to be next to the breaker block. So we know that here we have a breaker block because the market, if the market created a lower low, the market was creating a higher high, a lower low. Sorry, the market was created. This is a lower high. This is a higher low, a higher high, a higher low, a higher high. So we expected the market to react to an order block and continue with the movement going upwards, but instead the market broke to the downside. So we had a block here, we had a breakup, we had an order block here which failed to hold, and then this order block later turned to be a breaker block. Now since it's a breaker block, this breaker block here, when the market goes back here, it tends to also leave another order block. So we trade from this order block, or we trade from this extreme order block. But when we use this order block, we tend to use a confirmed entry, and then when we use this extreme order block, that's when we can enter aggressively, especially if we've seen liquidity, we've seen the market react to liquidity, and then we can see that the order block is on the QML level. Okay, now let's look at this New Zealand dollar chart. Let's look at this New Zealand dollar chart. Now, what can we see here? We saw the market react on a significant order block here, and then the market started pushing to the upside. Let me go ahead and get rid of this. We saw the market react on a significant order block. Now this is where we use a confirmed entry. This is where we use a confirmed entry. Now let's look what happened. The market took out this lows here, pushing to the downside, and then the market tapped into an order block and then pushed to the upside. Now we are expecting to have this here is a mini change of character, like we talked about it, guys. So this is a change, a mini change of character. This is a mini change of character. So here, this is a minor church. Let me just go ahead and label that. That's a minor church. That's a minor change of character. And where is our QML? Since we had a minor church, this now becomes our QML. So we are looking for an order block that is associated with this QML. And where is that order block? Here is that order block. As you can see here, we have that order block. Here we have that order block. So as you can see, the market did what? It went to the upside and then came here. It generated liquidity. As you can see here, the market generated liquidity. Without liquidity, guys, we don't trade. So the market generated liquidity there, and then it came, it tapped in, and then it started pushing to the upside. The market came back, generated liquidity, tapped in, and then started pushing to the upside. Now let's move on. As you can see here, we took out this high over here. When we took out that high, now we want to see the next setup. The market pushed to the upside, came back. As you can see here, it created this, and then it shot to the upside like that. And then the market started generating liquidity. Now here we wanted to find a point of interest. So where is our liquidity? As you can see, here is our liquidity. And then where is our order block? Let's look at this order block here. Now this order block is a significant order block because there are few things happening around this order block. Even though the market shot down under it by a few pips, it's still a significant order block because we have this structure here. As you can see, wait, let me show it to you. We have this over here, and then we have that taken out. Now this here would be our QML. It's not easy to see, but this here would be our QML. This level here would be our QML. And which order block is near that QML? This order block here. It also has what? This imbalance here. We have this imbalance over here. This imbalance that we had over here. There's a lot of imbalance here. As you can see, that imbalance we had over here because of this long candle. So when the market came into that order block, and then it started pushing to the upside. It started pushing to the upside. Now after here, after this has been taken out, where is our QML? Our QML will be here. This here would be our QML. So making this one a very significant order block. A very significant order block, and it's an extreme order block. So this one we would have to wait for a confirmation, a confirmed entry, but we don't see a confirmed entry here. And then when the market comes, it taps into that one, and the market starts shooting to the upside. And as you can see here, where is our QML? Our QML is here. This is our order block. As you can see, we are still waiting for the market to come and tap into order block so that the market can go to the upside. And here would be our take profit. That would be our take profit. Now let's look at this other example we got going on here. As you can see here, pushing to the downside, obviously, break of structure, POS, we're in a downward trend, and then we take out the structure. Obviously, you wouldn't use this order block to buy. We don't have any form of mitigation of liquidity created here. No liquidity generated whatsoever. So we would expect, we would not trade from this level, but we'd want to wait and see what happens. So the market took it out, change of character. I've taught these things many times, guys. Change of character. And the market started pushing to the downside, and then what did it generate? This liquidity over here. And then where's our QML here? Where's the order block that is supposed to be associated with the QML? It's this one over here. So this is our order block here. So the market went through this, manipulated the order block a bit, and then after that the market did what? Did push to the upside. And then after pushing to the upside, it came, we had another order block here to use for a confirmed entry, and then the market pushed to the upside. Now as you can see here, what did the market do? We're still waiting. We got another confirmed entry here. We got another confirmed entry here because the market pushed to the upside, taking out this high. And then where is our QML? QML is very important, guys. Here is our QML. QML is the last high taken out in the mini structure, the last high taken out before the push to the last low if it's a downtrend. So as you can see here, this is the last low here, pushing to the downside, and the market took that out. So this is the last low, and that's where we expect to find our order block. We did find it. Okay, so the market went back. Where is our order block? You know, in long wicks there are always order blocks hidden in long wicks. So as you can see, we have this order block right here. So the market tapped into it. The market tapped into the order block. The market tapped into that order block. So here, guys, we should have seen what we call a confirmed entry. We don't see any form of confirmed entry because the market was supposed to come and have a change of character, a mini change of character here. Okay, let me do this. A mini change of character. The market was supposed to drive into this area like this, change that, and then we should see something like this, pull to the upside, and then start pushing to the upside. And that hasn't happened yet, so we were not gonna be trading. We were not gonna be trading from this level. If it's not an extreme order block, we don't trade it using the aggressive method. We use a confirmed entry. As you can see here, the market came, and then even here you can still use a confirmed entry. As you can see, that is our QML level here, because this is the low. The market pushed up then down, so this is the low, the last low before the break to the upside. And then after the break to the upside, the market made what? An order block. So is the order block. As you can see, the order block is here, it tapped into it. Now the market is pushing to the upside. Here, if you want to secure profits, let's take profit. The first take profit would be here. The first take profit would be here. And the second take profit is there. And this is the usual take profit. The recent high is usually the take profit. So the take profit would be there. That's where the take profit would be. So I'm already in this trade, guys. I entered just around here. I waited for it to come in this order block. I entered aggressively because it's an extreme order block, and we also have the QML. And then the market started pushing to the upside. It took out this this mini high over here. As you can see, it took it out. And then when the market takes out that mini high, let me go to the 15-minute. As the market takes out this mini high over here, it left us an order block, and that's the one we are using to trade from. The market took out that mini order block. This is the QML. The mini order block, this level reacted to it, and then this candle here is the reason why we also added another position. Our first take profit, and we're also gonna have that final take profit.